What's going on, good people? Welcome back to another episode of the Bison Trading Show, coming at you live from the Bison Trading Labs. Today is June 10th, 2021, coming at you for our Thursday analysis. Right now, we're getting ready for our Friday live trading session. You know, we're coming to you to put together everything that we've been teaching this week to show you how to use it in a real live trading environment. If you don't know, I'm half of the Bison Trading Show crew. I go by the name of Ty Trades Futures. And of course, I'm here with my guy.
You already know, man, it's your boy. I'm the D guy, aka Pro Financial, the face behind Pro Financial. I hope you guys are ready for tonight. You have your notebooks and your pens prepared to get these levels. So tomorrow, when we step in there, we're gonna be stepping big. So I'm not gonna hold the show up no more. So I'm just gonna pass this back over to Ty. We're gonna get busy.
Right. So without further ado, let's get into these pairs and get into the analysis and see exactly what's been going on since the last time we talked on Tuesday. In terms of what the Dow Jones has been doing, if we look at the daily chart, we can see that we haven't really been doing too much over these past few days. We've also kind of been forming a consolidation zone, which is very interesting because anytime we form a consolidation zone in the past, we've usually broken to the upside. So that's something that we can look forward to in this occasion as well. It's not guaranteed, but we can definitely use what we've seen in the past to help us figure out where prices are going in the future. Now, what I want to do is break it down to the hourly chart. There's a few things that I want to show you. The first thing I want to show you is that if you look at this chart in terms of what it's doing on a longer term basis, it's really just hovering above a major level of support. Because remember, whenever major resistance levels get broken through, we tell you guys all the time that they usually come back and they retest those same levels. It's no magical number that tells you how many times it's going to test it. It could test it 10 times, 20 times, 100 times for a day, for a week, even for a year. But the market principles remain the same. And what we've seen is we've seen a longer term breakout retest because let's pull up our support and resistance. Remember, maybe 2.5 weeks ago, I was telling you guys about this double top right here that came from this general circle from May 18th. Now, that was for the longest time our high point in the market. Not the all-time high, but the relative term high for that time period. Now, ever since that time, we've finally been able to break above it. We broke above it on May 27th for the first time and stayed above it. And notice, from that point forward, if you follow the crosshairs all the way across, notice that this entire consolidation zone that we formed right now from here to here, this whole thing, even with all the choppiness with inside it, is still sitting on top of those double tops. So when we pull up the support and resistance, we can see the zone that corresponds with that level. And we can see that right here, look at how many times these levels get tested. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Multiple tests of these levels, but they have yet to break. So even though we see all of this right here, I want to talk on this too. All of this represents pretty much a consolidation zone. It's not too much to look forward to because if you're trying to look for any type of direction, at least in my opinion, from my eyes, what I see, it's hard to really say that there is a really well-defined direction within this general area. That's why we call it a consolidation zone because it's really more so back and forth sideways than it is up and down, higher highs and higher lows, lower lows and lower highs. It's not trending, it's moving sideways. So we don't want to pay attention to any of the noise in between this consolidation area. We just want to look at the fact that no matter what goes on up here, somehow it works its way back down to the support level and it holds up every time. So that's telling us that over the long term, bulls are still looking to push this market higher. But for right now, for where we're at, we got to be a little bit patient and wait for the market to start trending again. I would say if you're looking for any types of trades, you would probably be best suited going long off the bottom of the demand zone that lines up with what used to be these previous double tops over here. But all I would say is that you also have to take into consideration how prices are coming into that level. Remember on Tuesday, I told you guys, you never want to buy or sell at a level just because it hit it. You got to pay attention to how it gets us there and decide based on that price action whether or not you want to make a move. And based on what I'm seeing, in my opinion, I see if we start from up here, we have a double top followed by a lower high that led us back down to the demand zone. So for me, I don't want to take that move until I see some type of bullish activity coming off the bottom of the zone right here. So far we have a little bit of that on the 1 hour chart with this long tail candle wick. So I would say if prices break back above 530, you can potentially start to look for the long trade. But until then, I would say let's stay patient on this market, kind of wait for the US 30 to start trending again, because if it's one thing we know about this, when it moves, it moves. So until it moves, we just have to play it cool and wait for our opportunities and our chances, and we'll see how it goes. But that's my opinion on US 30. Let's pass it over to Darren. Let's get his thoughts on it and see how he sees this pair moving forward in the future.
All right, so we already know where we got to start off when we're looking at any kind of pair. We want to look at the highest time frame. We want to make sure what we're looking at on the higher time frames align on what we're or our decisions are going to happen on the lower time frame. So on the monthly, it's just pretty simple. Higher highs, higher lows. 20 is above the 50. Nothing too crazy out of the ordinary. We're going to drop down to the weekly. Weekly, same thing. 20 is above the 50. Higher highs, higher lows. But you can scan and scan the market and analyze it and see if you notice any type of patterns. At least for me, the type of pattern that I see is that the market usually runs and plays closely to the 20 moving average. When it comes to higher prices or makes a high, it finds its way back down to either touch the 20 or both 50. But it looks like to me, before it makes any crazy move, it kind of hits both lines before it kind of makes its official blow off move. But yeah, that's that one. So let's drop down to the daily. Daily, all right. So we see that the market made a high, came all the way down. What did it do? It came down and hit not one but both of the moving averages. We got a nice little bounce off of the I'm stuck 50 moving average. So I think just knowing that pattern, I think I want to kind of play closely towards that. And I feel like that area down there where just the wicks are sitting, something is in that particular area on why it's not breaking and coming down into that area. So unhide your signals, and I'm pretty sure that's somewhere around the zone. Yep, those wicks right there are a zone. So pretty much we'll be looking for the market to come back down and try to retest maybe the 50 moving average or lower before we can see some movement going back up any higher. But drop down to the 2 hour. I want to see something. So kind of notice also when we start over here by right underneath where my picture is, where the double top is. Notice how we were underneath that zone before where we are right now. So we have a nice little double top. So that was once a ceiling, and it seemed like the market just came up to that zone and just stepped on top of it, and now standing exactly on top of the zone. Being that we had that happen, I feel like now like we said, we're only going to be looking for up moves. Two is that we now have a set destination on where we're trying to get that bounce off of, and we're actually sitting right in the zone right now. So let's go to the 5 minute one last time. And I want to get Ty's zones, and I'm going to give some zones too. Today's 610. What was your zones you said you were going to use to get in for your long? Pause.
I would say anywhere above 530 should be good.
34, 530 above. Okay, so The 5 minute. I want you to draw pull up the Fibonacci levels for me. And being that we're going up, I want you to start at the bottom at the green wicks right over the 2100 and just go to the top. Yeah.
From here to here.
Now I want to see one what it looks like all the way at the top, and then where you said. I want to see how different do they look. Because I'm pretty sure they're gonna pretty much say all the same story. Alright, so now that's definitely too low. So go to the double, that little green wick down here, and go up. Yeah, that one, yep. Yep. Drag that over. Double zero it. Yeah. So being that we're exactly between the 61 and the 78, I think that's actually a prime area where quote unquote bigger banks like to get in their positions. So I would kind of do the same thing. So I would wait for the high that we to just to the very left of where we are right now, that little high. Yep. I would kind of wait for and it actually looks like it's happening right now for the breakup of that pull down and then now the shoot up. So that line underneath would have been my entry. What price is that? Not that one. The line above it. You just had it. Nope, the line you were
About
just in.
500.
No, go up to where you were that high. Go back up to the high. What price is that high? Yeah, 506, 510, 34, 510. What's the position on the 61 line? Is that 5? That's where you said.
Yep.
All right, so just to recap, the area for buys, I'm only going to be looking for buys right now. So that's just to cancel out the sellers. Sellers, you're going to have to kind of sit back and enjoy the ride. Buyers, I feel like if you can get prices to come to 34, 510, bounce off of that line, just where that wick did again, I would use that line as an entry. Or that's just me being a little aggressive. And actually, go to this wick over here right after 1500. This little green wick. Or 1500. Yeah, go straight up. That wick over to the right. Yep, that one. That's 525. So I would actually wait for the break of that particular line and the retest on the 34, 525. And I would just probably bring it back up to the structure or right where the moving average is. No, go to this is the 5 minute. Go to the 15. Yeah, I would try to take it all the way back up to the top. $34, $630. So just to recap and to conclude, I would only look for buys on this particular pair on US 30. The areas that I'll be looking for a break and a complete close of the candle and a retest is 34, 525, 34, 300, and 34, 510. If I can get a break and a retest on that, I'm all in and I'm breaking it back up to the top of structure, which is 34, 630. And that is my analysis.
All right. that right there, people, is one of the pairs that will be traded tomorrow. We'll be focusing a lot on the Dow Jones futures, so make sure you guys remember these levels because they will be coming back into play tomorrow. So with that being said, that's my analysis for US 30. Darren has a couple of pairs he wants to talk to you guys about as well. So we're gonna pass it over to him and let's get his analysis and see
You're not doing dollar Swiss?
Oh yeah, you're right.
I was like, wait, my boy, pass that joint right on over.
So yeah, let's go. Let's cover dollar Swiss before we move on. So you guys already know for dollar Swiss, the long-term trend is down. Since 2019, we've been moving lower from $1 all the way to 89 cents. So we've been in about 1,000 pip range. Big time movements on dollar Swiss over the past 2 years, and the downtrend has been continuing, as we can see on the daily chart. Ever since we hit these highs back in April, it was actually funny how the high for this market happened on April 1st. And from that point forward, it moved all the way down. So that's interesting. But yeah, as we can see, prices have moved all the way back down to what used to be a major level of previous support over here at around 89.18. Now we've been running into a little bit of support down there. We haven't been able to break it, but we know because of the strength of this trend is so strong that it's only a matter of time before that level gets broken. So for us as traders, all we have to do is figure out what's the best entry point for us to get into in order to take it back down in expectation of that break that we were just talking about. So we want to go down to the hourly chart because now that we've identified the trend on the higher time frame, we got to find the best entry point on the lower time frames. So these two wicks right here, these happened this morning when the CPI number came out. That's Consumer Price Index. I think the number was increased by 5%, which is a lot more than people were expecting. So it had a very, very adverse move on all the USD pairs, US 30, dollar Swiss, GU, everything US dollar related was affected. And we had two tweezer tops, long tail candle wicks. We know those usually lead to continuation in the direction if we see the movement continue on the next candle, which we did. We had one green candle, but then we had a bearish engulfing right after, and from that point forward, we've been moving lower. So all we need to do now is find our most recent last low. Now, if you guys were here on Tuesday, we were telling you guys that we like the 89.90 and we like the 90.10. If you look at these two wicks right here and you look at where they came up to, the high for these two wicks is 89.90. So if you were paying attention to our analysis on Tuesday, I know you caught a very good trade from these levels, and you should be up by about about 52 pips right now. So if we're trying to find the next level that we want to short from, we need to find the next last low. So what points out to me is this wick right here, 89.40. But because it's so close to the next level up, I consider this entire area the last low. So for me, I would like to take it off of the bodies instead of the wick, which also, if you notice the bodies, look at what price they kind of line up around. It's at 89.50 level, which is a major half number level in the market. We know that that's going to be important and play a major role. So if we're looking for a place to short from, that should definitely be one of our primary candidates. So I like the 89.50. I would say best case scenario, you could probably get 89.60, get to come back up to this last little wick right here if you can. So be patient and wait for those trades. I feel like overall, this pair has a lot of room left to run to the downside. Coming off of these two tweezer tops, I think this could be a very, very lucrative setup for all of my short traders out there. So for me, when it comes to dollar Swiss, I'm looking for that good old that good old short trade, just being patient and waiting for those levels. So once again, those levels are either go back to the hourly. I think I said 89.50 for sure, and then 89.60 if you want to be super conservative. So with that being said, man, y'all know how I get down. You know I love Dollar Swiss. It's one of my favorite pairs. So that's my spiel on it. Let's pass it over to Darren. Let's get his thoughts, see how he feels about the long-term prospects for Dollar Swiss.
All right, so dollar Swiss, like we said, is a currency that just been going down for some time. We've watched it long enough to not kind of know its direction. So everything has been pointing down. It looks like the market really respects the moving averages, the 20 and the 50. But like Tiberius was talking about the fake breakout, I think that was in the other pair, US 30. This one had that false breakout to where you might have thought, being that we broke that previous high over here to the left, that was the area to get to fake buyers to get into the market so that the sellers can bring the market and push the market down just the way it did right here. So we're only looking for the direction we're looking to get into our position. So down is what I see. I can't really see a up or argue for up. So let's go for the daily. All right, so the 20 is still below the 50. Higher, excuse me, lower lows and lower highs has been being formed for a very long time, ever since we reached 89.50. I'm sorry, not 89.50, 49. I keep saying 49. 94.50. Ever since it came to make that high at 94.50, it just shot all the way back down. But you kind of noticed our most recent pullback. Our most recent pullback pulled back at 90.50. So I feel like we should kind of stay closer towards the quarter level. So let's drop down to the 2 hour. So being that we're selling, we're looking for prices to come back up a little higher. So we want to buy low, sell high. So I think anywhere where those tweezer tops are, I think would be valid to hop in for a short. But you don't want to just catch yourself in at the bottom of the wicks and it goes all the way up and then it turns back around. So I think you should definitely get into any prices above the 50. So anywhere between 89 above the 50. So 89.65 and higher. But I want it above it a little bit more. So go higher a little bit. Up, 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 up. Starting like right there. Like say if the market broke that 50, I think it would be somewhere around there. I don't know. I just feel like it being down a little bit more is not it. So anywhere from the 89, 80 area and higher would be a good place to hop in for the short. So that's how I'm pretty much waiting on it. So let me get some good areas I want to try to get into. So I know Ty said he wanted to get in at the 89.60, the 89.40, and the 89.50. That's right.
Yeah.
And I think I'm gonna follow suit and stay closer to those areas too. But my only difference, I'm gonna do 89.25. Where's 89.25 at? That's all the way down there. And then 89.50. All right, so 89.50 and then the 89.75. And so I would do the 89.50, 89.60, and 89.75. Those would be my three little entries to happen. And where I'll be going would be pull it out to like the 4 hour, squish it in, close the market a little bit. Should I guess go to the daily? Okay. So if I get it off at 89.75, I think I'll just take it back down to structure. Where's 89.75 at? Like right. No, that's too short. Yeah, 89 from there to I can't see your pictures in a way, but I guess one of these lows over here. I'll follow these lows. Yep, that'll be TP1 and the next low. But I don't really see it going any too further than that. So, what's the one before it? 88.75. All right, so yeah, those are the areas I'll be looking to hop into to go short, and that's pretty much my analysis.
All right, so there we go, good people. That right there is dollar Swiss. Another one of the pairs that we'll be looking at tomorrow in our live trading session, coming to you on Friday morning. You know how we do. 9, 10, 15, 9:15, 9:10 a.m. Eastern Standard Time. Pull up. We're on Twitch. You know where to find us. So those are the first two that we want to talk about tonight. We also have another two extra that we want to drop on you tonight. So let's go ahead and pass it over to D, and let's get his thoughts on these couple of pairs he has too.
All right, so let me just go ahead and share the screen. So I guess like you guys know, I've been following AU. AU's been working with me for some time, so let's kind of look and see what's changed with AU since our last analysis. So nothing has really much changed on the weekly. The monthly. We never got a break above this high up here, this double top. So technically, we're now making lower lows and a lower high. The 7 is below the 65 are things you're supposed to be pointing out on the monthly. Weekly, we now have the market busting over the both moving averages, and we got a retest. That retest aligned exactly where this was once a high. Once we got this little double bottom, we got the market to shoot back up. Where we're sitting right now looks like we're just sitting in a consolidation area that's been going on for some time. This is a weekly chart, so this has been going on for some weeks. Earlier this year. So we've been sitting in that area for the whole year so far. So daily kind of says the same thing as the weekly, that we've begun to make higher highs and higher lows, even though our overall trend, not overall trend, but the trend on the monthly, which is down, we would still have to follow that. And I say that because since we didn't get a break of that high over to the left, this double top over here, we cannot say we're making higher highs and higher lows. So right now, I would be looking for the short still. I'll be looking for prices that comes into a strong supply zone, which I have this blue zone highlighted across this top right here. And look where it lines. It has 1, 2, 3 false breaking of this zone. This one actually had a false breakout where it actually broke the zone in its entirety, and then it had a retest. So if you would have probably thought that this was that retest, you would have gotten hurt because one, you didn't let this candle completely form, and two, I don't even think this coming down just this low right here would have been sufficient. I would have needed it to come all the way back down here. So being that it didn't come all the way back down here, I would have knew that was, or try to think of that, yo, this is a fake out because it didn't even come back to the area it's supposed to. So being that we didn't get this tap right here, this was the false breakout. So now we got the market to come down. The market played around in this area, and I think, like I said last analysis, this was a head and shoulders pattern for me. I had a head sitting up here, I had a shoulder sitting over here, and I was hoping to have a shoulder formed over here. The market pretty much came into this area exactly where I kind of pretty much said, and now it's making lower lows and lower highs. So now I would try to kind of use that same framework and bust it down to a lower time frame. So let me take this one away. And I'm going to use this zone as the area in which I'm going to use, like, okay, if it breaks over this zone, I know that the market is trying to do something crazy. So actually, I would try to use this as the buy low, sell high kind of narrative, where I would be looking for the market to come. I'll be looking for the market to come into this zone, but not only into the zone, but coming up as high as it possibly can, somewhere at the 77.90, 95, 77.95. You want to see prices reject or and pretty much hit a ceiling and then make its way down. Being that we've been having so many false breakouts, I want to kind of lower this down here a little bit more so that we can kind of pretty much see exactly where zone and area we needed to zone in on. If we can get a break, a rejection here still at this zone, we need to look for prices to break down at this lower zone. So actually, before we hop in, we want to make sure it breaks proper areas. So I would actually need it to break this zone first before I decide to hop in for the short. And this is me being a little conservative because I don't want the prices to come up to this area in which I said, and it does, and it keeps going up a little bit higher or whatever and pretty much stops me out. I'll be a little bit more conservative and let it break structure and look for the retest somewhere in this green zone. So once I get that retest or that pretty much that confirmation, I would want to hop in somewhere down here. So let's drop down to a lower time frame. So I would actually wait for that confirmation. Being that that was a daily, I don't want to, leave any money on the table, so to say. So I want to adjust it to another quote unquote structure that if it does break, we can kind of say it's safely to say it broke that area and we're just now looking for the retest. So I'll be looking for the break of this structure down here. I would have said these wicks right there, but I mean these candles, but the way those wicks are looking, I don't like it. And if you take it away, that's all gone. So maybe I need to focus on maybe this zone here. If it breaks this structure here, we can look for that retest right off of either one of these moving averages, and that possibly could be our confirmation to hop right on in. So let me write these two zones down before I pass this over to Ty to get his thoughts. So this is AU. And pretty much the areas I'm pretty much looking for to get into is the top of this high here, which is at 77. 77,420. We'll say 44. I mean, excuse me, 77,425 because I want to stay kind of close to that quarter level. Next will possibly be the next quarter level up, which is 77, 520. No. 77,425. I'm looking for 77,450. Yep, 77,450. And I want to use those quarter levels. So I want pretty much what I like to do with at least what I noticed with this. So I'm going to stay closer to the quarter levels because we hit those levels quite often. Also, kind of what I noticed too is this kind of just stuck out to me. It might be a little of a stretch, but I'm gonna go for it. I think that this could be a head and shoulders, and kind of hear me out. This is the head down here, and we have this shoulder. We're now should be waiting for prices to come back into this area for a rejection to come back up to complete the head and shoulders formation. So we would need a rejection not only here at the bottom, but we would need a rejection up here at the top for it to come back all the way down. But isn't a inverse head and shoulders a up pattern, or
It
is it
is. Yep.
it is a up pattern, right?
Yep.
So maybe with this head and shoulders, buyers, you can possibly come in and get a little bit of coins, because you can possibly come in and grab maybe let's just say 25 pips just to be safe, and then that'd be your little buy for the area. But if that happens, then that also would be the confirmation for the sellers, in which we needed higher prices to happen, and the rejection up here, because this was the ideal price up here. So to conclude, for my aggressive sell trade, I would get in down here, but I think getting in down here, this would be a buy. So we'll say it like this: if it comes down to this green zone, I would need the break of it out of it and the retest. That's it for my sell. And buyers, if you can get prices to come back into this green zone and find rejection, you can take it back to the top of this structure here for your 25 pips and can just get out. Because if you hold it any longer than that, you're fighting the trend and you'll never win. So with that said, I'm gonna pass it over to Tiberius and get some of his thoughts.
All right. So when it comes to AU, my analysis goes like this. Let's go to the daily chart and let's look at where we're at, because we're still trading within a particular range. We're trading between 78 cents at the top and 77 cents at the bottom. Now, we had a little false breakout last Friday where we had that that B pattern reversal where we pushed out of the zone. We pushed down below 77 cents for a little bit of time, but we quickly popped back up into the zone. So now that we're back in the zone once again, hold on, stay still, stay still. Giving me ADHD, boy.
Huh?
So you giving me ADHD with that mouse?
What that mean?
I
don't get it. You got ADHD?
If you know, you know.
I guess that's not meant for me to know it. Oh yeah, we're not gonna put the business out there. My fault.
Now that we're back into our initial trading range between 78 cents and 77, I'm still looking for the same pretty much general movement I've been looking for these past few weeks. If prices are able to actually successfully break below 77, I'll look for the short, or successfully above 78, I'll look for the long. But until one of those two things happen, I have to believe, based on the previous price action, that we will continue to create this consolidation zone that we've been stuck in for a long time. So until it breaks, I feel like you have to short it on the top, go long at the bottom, and that's how I would play it right now.
Okay. Is there any two prices you can give us to get in for your short?
If I was gonna go short, I would hop in at 78 cents.
78 flat. And where you be taking it back down the structure?
Yep, back down to 77.
Right down here. So you go to 78 to 77. Is that 10 pips?
Nope, that's 100.
100 pips. Take that any day. All right. So you're going from 77 to 78, right?
Yep.
So 77 to 78. All right, there you guys have it. So those are the levels that we'll definitely be looking over for tomorrow's session. So I hope you guys written that down. And now we're going to move on to our next pair. I've been kind of liking to trade lately. It's just ever since it gave me that movement in which I was looking, I was like, man. But the only thing that worries me on this one is that we're stuck in such a critical area. And that's why I've been really switching between this one and gold. I'm not sure if those two had any type of correlation. I don't possibly think so, but if it did, I feel like they're sitting at two very where this is sitting and where gold is sitting. Excuse me, where this is sitting and where AU is sitting. They're sitting in very important spots. And this gold, like I said before on last session, where it's sitting right now is at this pair's last all-time high. So it literally had like a breakout, false breakout. It literally hit a ceiling and then dropped all the way back down into this zone. But we not only get dropped into this zone, we had a little false breakout or a hit and just couldn't do it. Came back up, tested the same exact area, and shot all the way back down. So I feel like since we've come back into an area in which we had like a double top before, I think we could be now forming to set up like maybe a triple top. So if prices can kind of stay below where this area is right here, I would definitely be looking for prices to come back down before we end up going up because the overall trend is up. So let's look at the monthly. Like we said, this is the all-time high before. We had a double top. It shot all the way to the ground. This retest down here lined up with that previous high. Consolidated, broke out of it, retested areas that were important from before, and shot all the way up. Then we all of a sudden created another or a new all-time high. Prices came back up, hit this ceiling, and fell all the way down. It didn't even have enough momentum to even come to retest this area. It just shot all the way back down. Kind of look where that retest is lined up with. Uh, uh, last, excuse me, previous all-time highs of this pair. That's exactly where we're sitting. So 7 is above the 50. Excuse me, the 7 is above the 65 on this one. The 7 is above the 65 on the weekly. Still higher highs. Well, no, we made higher highs, higher lows, but once we hit the ceiling, we made lower lows and lower highs. Since we have not broken this high here, I don't even think anything would be kind of considered higher highs and higher lows. But I'm not going to be that aggressive. Until it breaks this high to this left, is probably when I'll be thinking about taking, where it's forming higher highs and higher lows. But let's just kind of focus on what we see and not kind of veer off from what we actually are seeing. So we got a breakout of this wedge that we drew some time ago. We got a breakout. We had the pull back down. And the pull back down aligned exactly with this high over to the left. So if we kind of like take that note, this particular pair likes to make highs, come all the way down to retest previous highs in which the market was at or previous levels in which the market was at. So I think with this, I think I'm going to do the same or, play the same playbook, which is we got the break out of the wedge. We got the retest at this high here. I'll be now looking for price to start making its way up. So let me drop down to lower time frame to see possibly where we can get an entry in now. So I think since we are, extending ourselves right now and sitting at high areas, we never buy in on all-time highs. Not all-time highs, but high areas. If we're planning to buy, we would need to, it should always be at a bottom of an area if you're looking to get in for a buy because you want to buy low and sell high. But you want to make sure your stop is tight because you don't want the market to go against you. So it looks like we're now coming into a strong supply zone. The last time it sat into this zone, we got a strong push back all the way down. So I think since even though all the higher time frame says everything is a buy, let me make sure. Okay. Yeah, so pretty much I would just still wait for prices to come back down. And what area kind of sticks out to me the most Let me move this. What sticks out to level that sticks out to me the most is this little wick that's sitting over to the left of over here. If we can get prices to come into this area or the bottom of this purple area, reject, this would be the area we'll be looking to get into. But being that this is gold and maybe it doesn't have enough whatever, we can use the bottom of the purple zone, these wicks over to the left, and the top of the zone. It looks like we got a hit of the top of the zone. We have a nice little tweezer bottom here. So I think we need to possibly still play off for lower areas, but also kind of realize that maybe the move that we're talking about pretty much already happened. So yeah, that's pretty much, so pretty much just let me get some areas before I pass it over to Ty. So like I said, anytime we're buying, we're looking to get in at lower areas. So the first area I would like to get into would be 1890. 1895.25 gold. 1895.25. The next area I'll be looking to get into would be the 65 moving average. I say that because the market always finds its way back to the 65 moving average for some reason. And yeah, I would look for that 1888 area again. Because last time we were doing our live trading session, that 1888 was a key level. 1888 point. I'm going to do 88 flat. And then the last one being like, this would be like the prime area to get in, which would be the bottom of these areas down here. If we can get price to come down to these lows down here, to this strong demand zone, this will be a perfect area to hop in for a long, because not only do you get in a perfect entry, you'll be able to capitalize on all this right here and just possibly just go back up to the top of the structure and just call it. Whereas if it didn't have enough momentum, you would just take it from the top of here, probably back up to the structure up here. So the two areas that I'm looking to have is 1895.25, 1895.25, and 1888 flat. So those are pretty much my two areas. And oh yeah, to my take profit, I would definitely want to try to come up somewhere around 1906 flat. All right, I know I rambled on enough. Ty, go ahead and give me your thoughts on this one. Let me
All right, so gold. One of the things I'm liking about gold so far is the fact that it's forming one of my favorite setups. So if we look at where we're at right now, if we look at the most recent big down candle that we see on the chart, that came from the non-farm payrolls report on Friday. Now, ever since that day, that kind of gave us the pullback that we needed to come back to major levels of support for buyers to show that they still have strength in the market. Because with all that momentum that we had coming into that level, there should be no reason why we stay above it, except the buyers stepped in and said, hey, we like prices down here, and we've been able to see prices kind of bounce back. Now, when they bounce back, look at what they did. They created a higher low in comparison to where they came from before. So for us, that kind of tells us exactly what kind of market we're trading in. We're trading in the buyer's market when it comes to gold. So for me, This entire pattern is definitely appealing to me because you have one V pattern reversal. The V pattern comes back up to the neckline. It pulls back down to the bodies at 1870. We get a long tail candle wick retest from that level. And then from there on, we start to move higher. So, in all, anytime I've seen this pair, it usually leads to a new high. So, we have to think about where that level can be. Of course, we have structure up here at 1920. And then we have the ultimate high over, at least relatively speaking, at 1960. That's the next level that we're aiming for. So I think if you do want to go long, I definitely will put my target at 1920. Now, I'm trying to figure out where I would get in, though. That's the thing. I like the level Darren mentioned earlier about 1895. I'm going to go ahead and say 1890 just because I want to get a little, like $5 extra. For me, that makes a big difference. So I'm looking for prices to come back to these wicks down here at 1890. And once we get a bounce from those levels, that's when I would definitely consider going long. But I think overall, this pair is definitely moving higher. It's just about us finding the right entry point to get into this market to ride that wave when we get the opportunity.
All right. There you guys have it. Gold. Gold has been moving and doing a lot of things. I'm trying to see, do you have anything to say, add on this? Hold on. There was something I wanted to say. That's why I cut you. I don't know if I cut you off. There's something I've seen. Go to 2 hour right quick. Would this be kind of stretching it? All right. I feel like I'm seeing a inverse head and shoulders pattern. Right. I have the head poking down right above the 7, right there. And then over by the 27th, where that wick lines up, that low wick high lines up with that high, is the shoulder. And when we drag it over to the cross, I feel like we actually had a multiple shoulders. And one was even a false breakout. So I feel like to me that kind of could be a confirmation that whatever's possibly going on, it's probably going to have another retest possibly before it continues to go up anymore. The only reason why I say a retest is another retest is because I feel like for some reason is where the shoulder had that false breakout. It might come to the top of the structure of the entire body and then come all the way back down and hit that again and then finally go up. I don't know. I don't know if that's just something is just, I don't know. But that's probably, like I said, that's why I said it could be pushing it. Is it pushing it?
No, I see what you're saying. That could definitely happen.
Okay. But yeah, I don't know if you had anything else to say. We're just going to move into our exploration section.
Let's do it.
All right. So that's the wrap up of our analysis for tonight. So I definitely want to move into our exploration section of the show, which has become one of my favorite parts of the show because I even begin to learn some things that I don't even know. Like I know them, but I don't know how to explain it or convey it in a way where someone can understand it. So what we're going to do tonight is hedging. I don't know if you guys have heard of it or ever read it or anything like that, but hedging is pretty much a tool used in the financial market to pretty much protect any position that you're planning to get. So like if I'm hopping in for a GU or any type of position, I'm going to hedge it for any planned losses that I may take on that investment. That's pretty much what it is in layman's terms. I don't know if you guys know that you can hedge one particular financial instrument, trade one particular instrument and hedge something close or related in that field. You can hedge that and get gains if that position goes against you. A good example that me and Ty Bears was talking about earlier while we were preparing for this episode tonight, which was if I decided to go long on an Apple product or an Apple stock, if that stock does go against me, I can hedge a technology or some closely technology company to get back the profits or the revenue that I lost on that Apple stock. It's literally that simple. Um, I know things have a lot of correlation, and you can kind of keep those things in mind as well. But when you're hedging, you pretty much it's just like a, how do you say, like a protective net. I would always say or advise that, yeah, you want to always have that plan B just in case things don't go your way. And I even just learned that you can hedge on, when it comes to forex. And like I think a good example, I don't know if it's too good of an example, but say if I wanted to buy some oil stock, I wanted to buy some oil stock. If that oil stock goes against me and goes the wrong way, I can hedge a big oil futures. I can lock in on oil futures to get back that loss that I occurred on that oil uh, stock. I don't know, stop me if I'm not saying it correctly, but I can buy that stock and then buy some futures, or excuse me, hedge some futures in the other way. And I know when we say hedging, you probably don't understand. So say if I wanted to buy that oil stock, I can sell that oil futures to hedge it. That's pretty much hedging. And it's like pretty much going the opposite direction. It's like the opposite direction. So if you're going or buying long, hedging something else, or you would short it. Vice versa, if I was shorting a particular oil stock or whatever, I can hedge it, going the other direction on something closer in the oil industry for a buy to get back, or to have that protective net just in case those oil stock don't go my way. But that's pretty much exactly what hedging is. And I thought, when you hear hedging, because I know a lot of people hear about hedging firms, hedging companies and stuff, but that's completely different. This kind of lets me know, like, oh, you can definitely have those plan Bs in place, because I knew what hedging was, but matter of fact, I couldn't even say I knew what hedging was because what I thought it was didn't align up with what my research pretty much said, which was pretty much an alternate, but plan B to have in place just in case that A doesn't go in my direction. So let me see if there's anything else I need to say. Because I know Ty, he knows, well, not he knows, but he can definitely give you, a good, or his feelings on hedging. So do you have anything you can tell so people make them understand hedging?
Yeah, so when it comes to hedging, like Darren said, in layman's terms, hedging is simply taking the opposite, I guess, position on whatever trade that you have open. So if you're long, in order to protect yourself, if you feel like the market is going down, you short something else that goes down while you're. Hold on. Let me not confuse y'all. Let me keep it simple. Let's use Apple as our example. If you go long on Apple and you feel like the market is going to go down, you short something that's very similar, if not the same as Apple. So with Apple, because Apple is such a big part of the NASDAQ composite index, you can actually short the NASDAQ futures to help you actually hedge your Apple position. So what I wanted to do tonight was come here and give you guys an example. So my example that I wanted to highlight, it highlights this most recent pullback in Apple. So I want to start right here from the earnings date on April 29th. Everybody see this E right here at the bottom of the screen? That E inside of the triangle house represents earnings, right? Boom, there we go. So We noticed that when the earnings came out, we definitely had a top in the market. So let's measure how much the stock dropped by, and then let's look at the futures contract to see how much you would have made and if you would have been able to balance out your loss if you were hedging the right way. So we have a high up here at the high for this candle is 137.07. So we'll start right here and bring it all the way back down to the lowest point. So during these 2 weeks, the price of Apple stock dropped by 15%. So this is from April 29th until March 13th. So you also need to look at the ES futures. So that's the S&P 500 futures. But remember, we talked about Apple being heavy in the technology, so we need to look at the NASDAQ futures. So let me get that up for you. Let me pull that up. All right. So let's go back to that same time period. Let's go back to April 29th. Let's find the top and let's measure it back down to its bottom point on May 13th. So on May 13th, the NASDAQ from that same time period fell by 8%. So you would have been able to take about 7% of your losses off of the table because you were down 15% on the stock, but you would have been able to make 8% on the futures contract. So all in all, you're able to reduce the risk that you had in the market. So instead of losing that whole 15%, because you made 8% on the futures, you were really only down 7%. So that's just if you trade enough to balance out your position. So if you got $100,000 worth of Apple stock, you trade $100,000 worth of futures contract. But you have to, there's something called a hedge ratio because sometimes the futures are not always going to line up perfectly with your stock. So you might have to buy multiple futures contracts. So if we look at this situation, the market moved down by 8% when the stock moved down by 15%. So that means that in order for your futures to balance out your stock, you need two of them. Two futures contracts would have gave you a gain of 16.4% when you took a loss of 15% on Apple stock. So your hedge would have made up for all of your losses. So whenever the numbers for the hedge don't line up, you just have to have more quantity to make that match up. Because ultimately, at the end of the day, you want what you already had to match what you're about to buy. You got $100,000 worth of Apple, short $100,000 worth of futures, and then adjust that number based on what the percentage gain is. And that right there is a very good way to adjust and actually manage the risk in your portfolio, whether it's long term or short term. I know we talk a lot about Forex. You can use this in the Forex markets too. Like last Friday, non-farm payroll number came out. We didn't know which way the market was going to go, but we knew it was going to be a big move regardless. So let's say you was long on euro dollar, EU, and you felt like the prices were going to crash when non-farm payrolls came out. You could hedge your long position in EU by shorting the euro futures. So you feel like the prices are going to fall in that moment. Guess what? If they do, what you make from the futures contract going short balances out what you lose from your long position, and you're still able to keep what you have without having to sell anything. And that's the benefits of hedging. And you can definitely use these in your portfolio when you feel like troubling times are coming up in the future.
All right, there you guys have it, man. Hedging, man. That was even some things I even really didn't know. And I'm going to try to use that in my toolbox to make my trading better. So with that said, man, I hope you guys had your notebook and took some notes, man, because we definitely dropped some good levels. For tomorrow, my favorite day of the week is Friday, but it's nothing other than our live Bison Trading Session where we actually put those levels we go over all week to the test and see what's going to happen. So with that being said, man, I appreciate everybody. Oh, no. let's not go jump too fast. Let's just get to our last section of the show, which is Traders Talk. Traders Talk was a section of the show that we put so we can give y'all the real talk on what Forex is and what it's all about, man. And that, a lot of people give trading Forex such a bad rap. But, man, if you put enough time and dedication into anything, your craft, you are what you put into anything. So I guess the thing I want to kind of give and leave with you guys are definitely having your plan or your trading plan for the week, writing out your levels that you're planning to have, and actually putting those levels into play. And I know the levels that I want to kind of recap and give back to you guys. I guess for you, 30, my levels was the 34 300 and the 34 525. And I know dollar Swiss, we were going to do 89.75, 89.50, 89.60. And I know AU, I was going to do 77 425 and 77 450. And lastly, I was going to do gold 1895.25 and 1888 flat. And those will be my areas. And I think for US 30, we were going to buy. Dollar Swiss, we were going to sell. AU, we're going to buy. And gold, we're going to buy. So, yeah, man, those are pretty much my levels and pretty much my recap that I want to leave with you guys. I'm going to now pass over to Ty and let him give you guys maybe a recap of what he wants you guys to know or what he wants you guys to kind of take away with of this trading experience.
Yeah, so for me tonight I wanted to talk about holding on to your trades and leaving the game when you're up and you're still winning. I think one of the things I've been working on as a trader is learning how to, I guess, put my ego to the side. Because when you have a good trade, it's easy for you to sit there and say, you know what, I'm going to do it again. Mm-hmm. But sometimes the market might not agree with your thoughts that you have. Mm-hmm. You might have these superior thoughts about yourself, but the market is like, hey, that was a one-time thing. You take that trade again, you're going to take a loss, my guy. Mm-hmm. So you have to learn how to walk away when you're up. You have to have the discipline to say, look, I had a good trade. I got what I wanted from the market. I'm done. I'll come back tomorrow and try my luck again. But don't push the issue if you've already done what you needed to do. You hit your goal, you got to get out of there. So that's what I've been working on lately. And one of the things that's kind of helped me is, I think I told you guys about this before, but for all of my new people, I like to use my demo account to help me when I still want to trade. So let's say I hop on my live account, I hit my daily profit target. Okay, I don't need to keep trading my live account, but I still want to keep trading the day because I want to get that practice in. I want to get those repetitions in and see what the market is offering me. So in order to fix that, I click off of my live account. I go over to my demo account. That way I can still trade the rest of the day, but the profits that I made, they're locked up. They won't be bothered. When I wake up tomorrow and open my platform, those gains will be there in my account. I don't have to worry about giving it back, but I can still trade the market, still practice, still get my reps in on the demo. And I feel like that's the best way to kind of, when you have that trading urge where you just saying, ooh, I gotta have it, that's cool. Switch over to demo. Make sure you don't mess up anything good that you already had going. And that's how you make progress and move forward and continue to grow your account step by step, day by day, and trade by trade.
All right, man. There you have it, man. Some knowledge for you guys to take with you. I hope you guys wrote those levels down because we're going to be up early tomorrow because we're going to be busy getting this Bison live trading session popping. So, with that being said, man, I appreciate everybody who pulled up. Anybody that follows us on Twitch or even follows on our Bison IG page, actually definitely follow us on IG at Bison Trading Show. Again, at Bison Trading Show, that is on IG. You can pull up to YouTube at the Bison Trading Show right here. You can hit me on my personal IG at I'm the D Guy or my business page, which is at Pearl_financial_LLC. Drop in, hit me with a DM, question, anything out here. I want to hear from all my followers and listeners who pull up every Tuesday and Thursday. But you could definitely hit my boy Ty Berry on his links at.
You guys can make sure you follow me on both YouTube and Instagram under the name Ty Trades Futures. On YouTube, I trade almost every day. I try and live stream my Dow Jones trading, like you guys can see. We've been trading the Dow Jones lately. How to trade the Dow Jones. Dow Jones practice. First trading session of June. Today we trade the Dow. So if you want to learn how to trade futures, specifically the S&P 500 and the Dow Jones futures, make sure you tap into my channel, subscribe, and check out my content. And of course, make sure you check out our business page, the Bison Trading Show on YouTube and Instagram. We have about, I think after today's video, 28 videos up here. So all of them actually are an hour long or more. Some of them are almost an hour 40, almost 2 hours, full of information throughout the entire video. So make sure you don't miss anything over here. And I think that covers it for the most part. Bison Trading Show, Ty Trades Futures, and Pearl Financial. You know where to reach us.
That's it, man. I appreciate everybody who pulled up tonight. Tell a friend to tell a friend to tell another friend to tell their friends. Hit that follow, man. Subscribe us on YouTube, man. And for anyone who has been with the show for a long enough time, man, should know definitely my next word I'm gonna say. Ty, take us out of here gracefully.
All right, good people. It's been a good week so far. We know tomorrow is the culmination day. So Friday morning, tomorrow morning, 9:15 a.m. Eastern Standard Time. We'll see you there. It's time for us to rip these markets apart and put together everything we've been teaching and learning this week. So let's get it on. For everybody that wants to trade tonight, be patient, be smart. We'll see you tomorrow morning, bright and early.
All right. Bow.